Well, hello, and welcome everyone to a talk that is definitely not about AI. But we're still talking about the hot topic for How to Web, and that is investors. Just it's a different kind of investor than we're used to at How to Web, different than angel investors or VCs. We're talking about micro investing and the new generation of tech-driven investing through communities. That's why we call this event Community Capital. We have with us three people, three companies I consider pioneers in this space in Romania. And all of these companies have opened up new opportunities for new people to become investors through modern means. We have with us Andrei, CEO and founder of SeedBlink, Europe's infrastructure for private markets, connecting founders, investors, and communities through a unified digital experience to streamline fundraising and growth. Next, we have Alex from stock.estate, the first Romanian real estate crowd lending platform, offering vetted and asset-backed investment opportunities. And last but not least, thank you for the diversity. We have Cătălina with us, which is head of operations at Fagura, the first crowd lending platform in Romania and in Moldova. And Fagura democratized access to loan financing for SMEs and freelancers by connecting them with investors. So we have three different asset classes, three pioneering companies, three communities here, unique in their own ways, and we'll probably have multiple perspectives. We'll have an open discussion, and I will try to do my best as a moderator to leave time for audience questions at the end. And a small disclaimer, I will need your help on this. Whatever we discuss today, please do not consider it investment advice. Do your own research, do your own due diligence, and take well-informed decisions when investing. Did I do that right? Okay, legally we're fine. Cool. So let's start with a question for everyone. And I will say ladies first, but everyone will be able to answer this question. How does your community look like? What's your typical investor?
Hello, everyone. Honored to be here and honored to represent Fagura, which Alex introduced very well. We are the first crowd lending platform in the Romanian-speaking market. So on our platform, borrowers, freelancers, SMEs that are in search for development capital, they can connect with investors that have those money and are looking to diversify their portfolio and to get returns that are attractive and more and bigger than in the traditional investment tools. So yeah, community is something that we care a lot about. We have a big community of investors and borrowers that also exchange their roles on the platform. The SMEs that take loans from Fagura become institutional investors. The investors become the clients of the SMEs that they invest in. So we are caring a lot about the community that we are building. We are having a lot of community events, and I invite all of the people in this room to our next event, Investitorul după orele de program. Please follow our pages and you will see the date and hour. Talking about the investor, or how an investor looks like on Fagura. Most of our investors are tech-savvy people, somewhere between 28 and 45 maybe. Someone that is looking to diversify its portfolio. And yeah, we are, as you did the disclaimer right at the beginning, we recommend our investors to invest somewhere between 10% of their portfolio in Fagura and bring or contribute to the impact that SMEs are making on the economic development of the country. So it's like giving back to the community that you are from, because also we have a lot of investors that are entrepreneurs themselves. I'll stop here.
Nice, thank you. Alex, can go on.
Thanks, Alex. And thanks everyone for being here and for choosing this session among all of the other interesting sessions that we have today at the conference here. And congrats for being interested in investing, putting your money to work, and alternative investments. So I represent stock.estate. We are Romania's first real estate crowdfunding company. We actually have the second license in crowdfunding after SeedBlink here, the Trailblazers. About our investors, they're like you, intellectually curious, tech-savvy, and they probably dabbled in investments before, and they're curious about what other ways they can put their money to work. And they're also curious about real estate and how they can jump into the real estate bandwagon without having to deal with the hassle of like buying a property and renting it out. And that's our value proposition for them, which is earn from real estate without the hassle.
Hi everyone, I'm also very glad to be here. I'm the only one in the panel having gray hair. Also because we are crowdfunding since 2020, so we are probably the first also in the region to come with this new concept and giving access to investors for investing in tech startups in our case. We are doing only equity investing. And coming back to your straight question, the profile of the investors we have, and again, there are 5 years experience in, we are experiencing this with SeedBlink. They are entrepreneurs, they are C-level executives. I would say they are educated people. I know who they voted with in our elections. The profile is
do you know that?
And I think for the diversity, we have roughly 20% women as well. So they are the brave women that are investing with us. And of course, one of the barriers for going more to the retail investors is our minimum ticket is 2,500. So most of them are more in the range of affluent or high net worth individuals. And in terms of age, I think they are in between 20 and 60. And yeah, we have this kind of profile.
It's great that it's such a great range, and hearing from all of you, investment is really now made accessible to everyone.
I forgot to mention that we are spread, the investor we are working with, they are spread in more than 80 countries, the active investors.
Nice. Thank you for putting Romania on the map, then. Cătălina, I think that you also know something about your investors' voting preferences. You had very important elections right now in Moldova. But besides that, what do you think a community source investment, how do you think does it differ from an individual investment, and why should someone, experienced or not, consider that for their portfolio?
That's a very good question. And I'll try to come up with several reasons why an investor should consider community or crowd investment as something that should be in his portfolio. But first of all, community investment or crowd lending, as we are, is about democratizing the access, because the minimum ticket on Fagura is €25, so anyone can invest on Fagura, basically anyone. The second why is about inclusion, because we care about the community, we care about the impact that SMEs have on the economic development, and the investor can be the person that contributes to this economic development. Why Fagura could be the best fit for your portfolio? First of all, in this volatile economic times that we are living in, you know, the stock market will collapse, the Fagura lenders will still pay their rates, right, monthly, and you will get your interest monthly. This is the first reason. The second reason is that we are providing flexibility for our investors. So our investors can withdraw their money anytime and invest on the secondary market and sell their investments on the secondary market. And third, of course, is the return. Because if you compare with the traditional investment instruments or bank deposits, the interest rate is not comparable.
Got it. I think that's a good answer, and it applies for all types of community investing. I want to touch about something that Alex said in his intro, and you also touched a bit upon. What about the feeling of ownership? How does it differ to own a part of something instead of owning the whole asset or the real asset?
Yeah, I'm glad you touched on that because that's a common misconception when I talk to people and I tell them about stock.estate. The first thing they think about is that they're going to be owning the asset. And that's not what we do. We do crowd lending. So legally, you own a lending contract. You lend money to a real estate developer, and they are obliged to pay interest a predefined period, and they reimburse the principal at the end of this period. At the same time, it is linked to an asset. All of our investments are asset-backed because the real estate developer has a project that's ongoing that we analyze and vet, and we list on our platform. So you are investing in a certain project. On top of that, we do take collateral. So when you invest on our platform, each investment we take an 150% collateral for, which means, let's say the developer has another property lying around. Let's say the funding round is 200K. So that means he needs to provide a guarantee that's worth at least 300K. We think this is the best mix between exposing yourself to the real estate market while at the same time being a passive investment, because probably some of you know the hassle that owning a property is and having to rent it out and doing things like that. That's a lot more, it requires a lot more upfront capital and a lot more involvement, whereas we try to offer the same value without the hassle.
Thanks. Thank you, Alex. My next question would be for Andrei, and it's about education. What do retail investors often miss about private market investing that only the insiders know? And how can tools and education help us close that gap? Market.
Yeah, it's a topic that is always on our agenda because we saw a lot of people just coming to the platform for one shot, meaning one investment, and then they are just waiting for that becoming a unicorn, which is statistically quite uncommon to happen. So from the very beginning, we try to offer them, and we also built the technology to help them to build a thesis and to invest in a portfolio and to act like a micro VC actually. And more than that, we wanted to offer opportunities to co-invest. Most of our opportunities on our platform are co-investing along with VCs and well-known business angels or networks. So someone that is already there with his own view and experience. On the other hand, we try to educate our investors not to put all their. This is a risky asset class, meaning investing in startups. We all know, or we should know that startups fail because they have a lot of obstacles. They are at the very beginning. Their product market fit could be temporary. And we also try to educate the investors not to invest emotionally. So one important thing is to invest in a portfolio and to know or to get to know better the industry you are investing in. So and if you are already a client and you feel that that company is filling a gap or solving well a need, yeah, that's a good business case for investing in a certain startup. And of course, we try to offer the education platform or tools to better know what are the terms and conditions, because they are so. I'm coming from banking, and I had probably 2 years gap for erasing my principles in providing loans for in the banking world, as compared with the investing in startups. It's a totally different infrastructure and tools. So yeah, we try to help the investors to learn that.
Yeah, nice. I think your approach on education has taught me a lot personally about what it means to invest in startups. And you are right that you have to combine that education with tools. And I would advance that question maybe even to the others. Maybe Cătălina, tell us about how technology is helping you in your process of promoting investments.
Indeed, totally agree with what Andrei said. And something else that we learned along the way is that investors, when investing, they're not looking only to, the risk aversity is not the only factor that they are looking at, but also the level of effort that they have to put in to make those investments. And here comes the technology and helps us to automate the investments, to give our investors some recommendations on the loans they should invest in, track the metrics of the performance metrics of their investments, and different other features that are integrated on our platform. Auto invest, this is also something that reduces the level of effort for an investor. This is for the investor's part. On the borrower's part, but not only, all the investors also have access to these tools, we integrated AI. So AI, I hope you will agree with me, is the game changer in this tech world. We integrated AI assistants that are trained on the financial data of the company and can provide recommendations on how to improve your operations, how to increase your revenue and stuff like this. We have a virtual assistant that is trained on the legislation in Romania that can answer basically any legal question that you may have. So we also save money for our investors and for our lenders, for our borrowers, for different legal consultants that they might require to answer these questions. We also have an AI scoring engine that is developed in-house, so it's owned by Fagura, and does all these things like instant credit scoring, interest rate, risk level, and credit limit. So indeed, technology helps a lot in this regard, reduces the level of effort, saves money, and saves time for our users.
Okay. And also, I think it also saves money and time for you as a business and helps you streamline.
Absolutely.
Helps you scale. But there's a different scaling problem that I see in the investing world. And I think it's how do you manage not one single investor that you would do traditionally on an asset, but managing multiple, like hundreds or even thousands. And I think that this might be interesting especially for you, Andrei, and SeedBlink. How do you use tools, technology to scale that process of managing thousands of investors, especially for the founder side, for their perspective, while still maintaining what Cătălina said, while maintaining regulatory compliance? Need that.
Indeed, one of the value propositions we came with from the very beginning with investing in the cap table of startups was, and this was a clear demand from most of the founders, not to have to interact or to deal with tens or hundreds of investors. On the other hand, we are meeting different companies. They're were already in this play, and just because they were hungry for money, they accepted maybe a small barrier to get investors on their cap table. And they are thinking now how to clean up this, because you don't have to, as a founder, you have so limited time to spend on this kind of structuring and organization of the cap table and dealing with all the investors. It's like you have, maybe this is more available for men than and women feel better this concept. If you have the bedroom, all the clothes spread all over the bedroom, then probably you cannot find exactly what you need and how to deal with different kind of different garments you need. On the other hand, if you have a dressing or a wardrobe organized, it's the same. You can even scale it if you have room there in the wardrobe. So it's the same with the cap table. You have to have a clear organization of the cap table, and the tools that we are offering is just you have to click and to organize it, and we are dealing with all the infrastructure behind. So this is the support we are providing to the startups, to the founders, as well as to the investors. Because if you are raising several rounds, at some point in time, VC is maybe it's a no-go because of the unclear cap table that you have. So you have to be prepared for that stage.
Nice. And there's a lot of ways that you're solving the challenges on the founder side, on the beneficiary. And maybe we continue on this subject a bit. Maybe even, Alex, having your opinion, how does it feel on the beneficiary side? So on the developer or who's getting the investment, do they see any advantages in like the community nature of the investment, to have a community of investors?
Yeah, I think that's a great point, Alex. And that's something that comes a lot from our users, which is why do the real estate developers need the money from you, right? What is the value that you are providing in the end? Why don't they go to the bank? Isn't the bank cheaper? These are the kind of questions that we get every day, and I think they're very well founded, because you're trying to think of, okay, I'm putting my money with these guys. How are they making money? Because I'm going to be making money with them. My question, my answer in our case is related to, Andrei probably knows this very well, how rigid banks are when they evaluate, when they give out a loan, right? So that's something real estate developers really have to fight with. Sometimes they get money later, sometimes they don't get money at all. They have to take bridge loans and things like that. So our onboarding process is a lot faster. We deal with smaller loans than what banks deal with. And also they get a marketing benefit. So listing their product on our platform, getting exposed to thousands of investors. These investors can potentially become buyers in their real estate projects as well. And why lie? They liked us and they believed in the project. They saw potential in it and saw it potentially growing to a bigger level than we are right now. And they were like, yeah, we want to get in on this bandwagon. We want to get financed in this way. And why not? Crowdfunding seems like a good way to get funding continuously. Every month we do another small round, and I have another way of financing my projects. A bit more expensive than banks, but a lot more nimble.
I would like to add something here, something important from our perspective. Besides the fast onboarding, fast time to yes, time to money, community, lending and funding, we also see the crowd lending and crowdfunding as a way to validate your business model. Mm-hmm. If you, as a startup or a project developer, you are looking for money to develop your project, right, to raise your startup, and on our platforms, 20, 50, up to 50 investors decide to invest in your company, then be sure that these investors, they checked on you, they looked at your financial data, they looked at your business model, and be sure that if you got money from this community of investors, then you can go further convinced in what you do, that you're doing it right.
That's an interesting point. So you have 50 investors looking at an opportunity and they decide if it's a good one or not. But you mentioned earlier that we're in a volatile market, and that's the word for it. But you have to look at every opportunity through the lens of risk over reward. And you yourself as a platform have to do it, investors have to do it. How do you do that? How do you balance risk and reward in crowd lending?
We do not promise our investors that you will get rich fast with Fagura. We promise predictable and stable returns on your investments. So on Fagura, our investors, they get on average an interest rate of 12% per loans that they invest in. We have products for investors that are risk averse and for the investors that are willing to take the risks. So for those that are risk averse, we have Fagura Prime that guarantees 8.5 return in euro, right, on a 5,000 euro minimum investment for a period of 2 years. And we guarantee that interest rate through a reserve fund that we created in-house. And we also have products for the investors that are willing to take the risk and get that 12, 15 interest rate. They can invest through the platform by themselves. They can set strategies using the auto invest tool. They can invest on the secondary market. So I guess we can accommodate any risk awareness that investors might have and propose returns for different categories of investors.
Okay, but there is one factor that's usually not factored into the investment. Investors don't think of it when they get in, but they do have to think of it when they get out, liquidity. And I would ask maybe Alex, tell us a bit about how liquidity is perceived in community capital. What are the hurdles of getting out of it, of exiting an investment?
Yeah, liquidity has historically been a challenge in alternative investments, right? You put your money in, you don't know if or when you're going to get it back, right? So how do I sell my investment? How do I get out? How do I exit the investment earlier, let's say? That can be done in multiple ways. One way is a secondary market. Cătălina mentioned Fagura offers that. We're going to be offering that next year. And another product that we actually launched today in Premier is a guaranteed buyback program, probably very similar to also what you said, which is a project which you can exit at any point. It's very similar to like a deposit at the bank. You put your money and there's a fund that's being kept and we can repay your loan at any point during the project. So let's say you have an emergency, you put your money with us. Obviously, this product has a lower return than the other campaigns on our platform, which you can only exit at the end. But still, you get your money back on the spot, and it's fully guaranteed. So yeah, always think about, if I get into this investment, how liquid is it, and how fast can I get out? That's an important thing to think about before you put down your money.
Yeah. And also it comes with transparency and a lot of other things that I think kind of start to fall under the umbrella of regulation. And I think as crowdfunding is becoming more mainstream, regulation is also becoming more impactful. And what you guys do, I mean, Moldova, I think you also know some things coming up. I know personally of European crowdfunding service providers regulation. I know Alex told me a bit about this. But maybe for Andrei, because you've been around the block for more than most of us, what are the challenges and opportunities that come with regulation for this market?
Indeed, there are pros and cons as for everything in business or in life. This regulation, let's start with the cons, what is not covering, because it was meant to be an umbrella for, it was one of the first unified regulation actually, that was mandatory for each of the EU countries that came into place, I think, 3.5 years ago. We were part of, because we were early in the business, we are part of the platforms that were questioned about the draft of this regulation, and it was a very good opportunity for the unified European market. On the other hand, the ones that created this were not very much, because there was not a relevant track history at that point in European markets, more in the UK and the US. We're not thinking to a unified operational model for the platforms. And now we are debating also, we have reached at the level of ESMA, the European authority at the capital markets, to ask them or to push to have a clear unified operational model for this. Because, for example, in our case, we have this infrastructure built for nominee, which is more easy to build in the Anglo-Saxon markets because of the legislation. In the French related ecosystems is not working as simple. So we want to push for a unified approach on the operational side of the business. On the other hand, the opportunities that came out with this unified regulation were about, in our case, we passported our license from the very beginning in all the other 26 European EU countries. We can go for investors elsewhere in EU. We can come with different opportunities of startups across the region, and not only because we are not limited only at EU, just for the investors. For the startups, we can bring also from the other continents, as we did actually. And you can be one of the features, important features for the startups, besides raising money and having access to different investors, is, and we just build a product with Spotlight just for the companies that are reviewing their pitch deck with us. We have an AI agent for that. Then they can be exposed to the whole community, because we are talking now about community capital, and they could get feedback from different investors elsewhere, not only from Romania or from European markets. And I think if they are using them in a smart way, they can, of course, use this opportunity to be better prepared and raise better capital for their needs.
Alex, this talk is actually about AI. You lied to us.
Yeah. No, but I'm amazed of we were inside the perspective, Andrei, and we got a lot of super useful info. And I'm amazed when I see SeedBlink a couple of months apart. I always see something new happening, and a new tool, a new feature that helps founders in their process, either it's fundraising or growth. And I think it's amazing that you stay connected to that, and also, and I think every one of you also distributes that knowledge into the investor community. That doesn't happen in a lot of other areas, and I think it touches upon what community actually means for this. And I think we'll move on to audience questions, but I'll just ask one short question with one short answer from any of you or each of you before we move on. If you were to start again, start from scratch with a new asset class, different than what you're doing right now, what would it be?
You expect me to go first because I'm a lady?
No, whoever wants to.
Convertible notes, maybe? Okay.
Convertible notes, nice.
I don't know. Success is a function of timing and how well you understand the product.
Mm-hmm.
So I would probably do my research and look into, is it a good time for product X, and how good would I be at that? Or how good of a founding team can I create? But I'd probably choose real estate, to be honest.
Cool.
I will give a, let's say, classical answer for that, because we always promoted the diversification of the portfolio. So no matter what kind of asset class you have to have a clear thesis. So I would always think to spread my investments across different classes of assets, and this is for sure the startups is the one with the highest potential, but it's coming with a higher risk attached. But you have to have the tools and the knowledge and the education to be successful in each asset class.
Nice. I think your answers completed each other very well. We still have a couple of minutes left. Are there any audience questions? Have one over there, one over there. You can go first.
Okay. What is the greatest amount in crowdfunding that's been raised for one project?
The maximum amount?
Greatest amount that was raised.
Maximum amount.
In our case, there is a limit on the regulation of 5 million euro per company per year. In our case, it was 2 million so far. In just one round. We had several rounds on that.
Thank you.
For us, about 250K.
And for us, it's the total investment volume is 15 million euro. The loans that are provided to SMEs are up to 25,000. and the limit for the investor depends on if either it's for sophisticated or non-sophisticated investor. And for non-sophisticated, the limit ranges between 25 euro to 500 euro. And for sophisticated investors, we can raise that limit. We negotiate that.
Nice, thank you.
So, Andrei, I followed SeedBlink for a while now, and I've noticed that there is less, I don't know, there was less listings latest. Is that because of the transition between, for the CEO transition, I mean, or is just because there are no startups on the market which are really interesting?
Good catch. Thank you for the question. Indeed, we're in a transition of becoming more tech infrastructure for this ecosystem, both for the startups and for the investors. And on the other hand, looking to the investors' feedback that we have, they were their ask was to be more picky in with the startups that we are coming with on the platform. So this is the main reason we selected in a different way the startups that have public rounds. On the other hand, you cannot see this. We have a lot of private rounds and not going to the public just for a limited number of investors, especially from their network. And this is happening in a private way.
Hello, everyone. I guess this is a question for Alex. What's your vetting process when it comes to choosing the projects or the project sponsors?
Yeah, thank you. This is probably the third most popular question. So the first two were asked by Alex here. Yeah, we have quite a comprehensive vetting process, but it's a lot more tailored to what would fit a developer. So we look at stuff like, is the project started, first of all? Do they have like the construction authorization? Is it registered? And all things like that. That's obviously a green flag. Has it been vetted previously by the bank? How do the financials look for both the company and related companies and other companies of the founders that are looking to, for the borrowers, right? So all these get pulled together and many other things. I'm not an expert on that. I build a platform. I'm the CTO. Yeah, I can tell you a bit about this. But yeah, all this goes into, let's say, the final evaluation. And I can tell you that we say no to 9 out of 10 real estate developers that reach out to us in terms of funding due to various reasons. And one of them being there's no collateral, so there's no guarantee. And in that case, for us, it's too risky most of the time to raise money on our platform.
Cătălina, so as a financial advisor, why I would advise my customers to come to your platform instead of buying corporate bonds on the BVB market, of course?
Well, the answer is very, very simple. First of all, the returns are not comparable to the bank deposits and other instruments. We are less volatile than any other investment tool because, as I said, if the stock market will collapse, you will still get your interest rates from the borrowers that pay their monthly payments. And third, we are much more flexible. You can withdraw your money anytime you want. You can invest on the second market. Yeah, and I guess these three reasons are very important for an investor. And the last one, the cherry on the top, is the level of effort. It's minimal. You set your auto-invest strategies and you put your money at work without worrying about what company should I invest in today or tomorrow. You mean the investor, if they can...
Do they get a yield to date, like if they get their money quicker?
Absolutely.
Okay, thank you.
Cool. Any other questions? I think we're on time, and that's a wrap. Thank you, everyone. And I think we should give it up for our speakers, and not just because they're our speakers, but because they're the ones that have actually built this market space and have created opportunities for both sides, for investors and beneficiaries. And a big round of applause. Thank you.
And we should give it up to Alex as well.
Yeah.
He reached out to us and he organized this whole event. So
Thank you, Alex.
big round of applause for him.
Thank you.
Thank you so much.
Thank